Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30 on a daily chart here, and we're looking for this A, B and C correction through here, and this particular move down through here is the wave C here. We're looking for 5 waves in that. Now, it's kind of splitting hairs a little bit in terms of do we have a low in here or not, or would you have one more little low to be coming into here, and we'll look at that in a moment. In the European markets, it seems like the low is in already, and it's moving up quite nicely. So we'll just explore this corrective pattern here and this particular low through here as well. So with that in mind, just drilling into that particular 3-wave correction, this A, B and C here that started on the equinox on the 21st is this particular correction here, this A, B wave and the C wave in 5 waves. Now, in 5 waves, we were looking yesterday at this being wave 1 to here, wave 2 to here, and then 1, 2, 3, 4 and 5 for wave 3 here, and wave 4 normally pulls back up to wave 4 of 1 lesser degree, or we could use it in terms of the Fibonacci ratio here of 38.2% here, which is close enough for those purposes as such. Now, as I mentioned before, the European markets have pushed right up through here. So it is possible that this wave 5 is actually over here and it's completed at this point here, and I've miscalculated the structure within here. I'm not too sure about that, and I can show you what I've done in here in a moment. This move up through here does appear to be in 5 waves, so it can either be as a wave 4 here, for instance. It could be an A wave, a B wave and a C wave here as a flat correction for wave 4, and then make a new low down here. It's not going to make a big low down here because if that's the case, the extension is in wave 3 here, so that means that wave 5 here would be roughly the same size as wave 1 here. So like, it's not a big deal. And the Nasdaq actually has taken the low out through here as well and created the new low. The S&P 500 and the Dow are above here. So yeah, look, it's just sort of splitting hairs, but once it is finished, then we can look to the upside there. So just pulling into this wave structure just here, just to show you the way that I've counted it. Starting from the top here, it's down for 1, 2, 3, then the A, the B and the C across here for 4, and down for 5 here, which would make wave 1. Looking at this as a corrective pattern for wave 2 here, and then from wave 2 we're going down into wave 3, and that would be 5 waves and going down in that direction. And this is how I've counted those 5 waves. It's the 1, the 2, and then the 3rd wave down to here. So I've counted this 1, 2, 3, 4 and 5 waves into here, and then the 4th wave across here as A and a B and a C wave to here for wave 4, and then wave 5 down to here in terms of 1, 2, 3, 4, 5 for the 3rd wave, and then we're looking for wave 4 to pull back up to the 38% mark roughly, or the wave 4 of 1 lesser degree here, and that's unfolded nicely. But it does appear that we've got 5 wave structure up through here, so this could actually be up for wave 1 and back for wave 2 and up for wave 3. So if the price found support on the 1450 there, then that would be a strong case for that. Or in terms of trading and you need just to get into the market, well then support on the 144 there would be important. It's a number where Gann and Elliott meet, the only number really, but really at the same time there's not a lot of difference between Gann and Elliott in terms of their percentages and so forth. So they're very, very similar when you have a closer look at them. So that's what I don't know. I don't know if we got this wave 5 down to here or we're just at wave 3 here. So It's just something that we need to work through, and of course this is the same with the S&P 500 as well. In terms of the S&P 500, it's 5-wave structure to the downside as well. Wave 1 and 2 is simple. The wave 3 here coming down is also quite simple, really. The 1, the 2, the 3, the 4, and the 5. But when you look at the cash market, it counts as a clearer 5 waves when we put this here, and this here as well. So it's just a subtle point that I'm not that sure about. It's just something that I need to mention. But when we look at the European markets and its correction, if we look at, say, the DAX first, also from the 21st of the equinox up here, we're also looking for its A, B, and C correction through here. And you can see from here that it's a bit of a dodgy wave count coming down through here, of course, but it does count reasonably okay. But the point to make here is that you can see that it's gone really strong up through here. Do you know what I mean? It's moved past the 4th wave here. So it's really got that sort of completing end there. So this move up here can be counted as wave 1 and back for wave 2, and that wave 1 up there counts quite nicely as well. If we have a look at that on a smaller detail here, we can see that when you're counting the waves, you look for something that sort of sticks out the most, and I just naturally always tend to look at the wave 3 there, the strongest part of the structure here. That's where most of the volume would come into the structure. The wave 5 here would have less volume than wave 3 here, and that's a way to tell that it is a wave 5. But still, the 1, the 2, the 3, the 4, and the 5, and then this would be the A, the B, and the C coming back down through here. So I like working with 72, so that would be the 722 here. The 61.8 retracement level would come pretty close to that too, as a wave 2 retracement level here. So coming in around that area there, so we'd see like an A and a B and a C wave coming through here, and then further upside through there. Now, the other thing that I wanted to point out too, that with the American markets, if we have this right here as an A, B, C is the S&P 500. If we've got this right as an A and a B and a C wave here, and it starts to move to the upside, well then it's really going to fuel the Australian market, because the Australian market, when we look at that, has been, this is on a daily chart here, has been really strong, and we recognise that it was strong right from the go, because even when the US markets were going up, our market was going down. So it's been a sort of a reverse situation, really. So, but you can imagine that if the US markets are going up and ours is pointing up as well, then that's really going to fuel that to somewhat, isn't it? So, yeah. So we could be in for some strong moves here. And obviously the banks have been leading the way, and it's always the banks that lead out of a bear market, because obviously they're supplying the liquidity to the market, the loans and yada 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 stuff. So that's the reason for that, and you can see that with the banks. So, but anyway, this structure moving up through here, we understood that there was going to be some type of corrective pattern across the 4,500, and normally we'd trade to a number and get out, and then not really get involved in until we get a setup again. But as doing the analyst work, we've got to kind of track all the little bits and pieces for it and so forth. So, but look, this is the arrival, the reaction from support here, and then we would see a move high, the first high above the level, and then we'll see a correction on the other side. That's if it doesn't fail directly from the 4,500. So if we do get a move up through there, then we would be looking at it in this light here. This is a 3-wave correction here, and it makes it a 3-wave corrective pattern because this market has moved up through here. So, those pictures that we were looking at with the DAX and the FTSE would be the same as well, and there's a strong correlation between Australia and the UK in terms of those markets. The FTSE is just 10 times as bigger in terms of volume, but we could look at this up for 1 here and back for 2. If that was the case, then we'd have wave 3 up and wave 4 and wave 5. So we could be looking up at 45.50 or 45.72 there as the first high above the level there. So I think that's interesting. I have got this tagged as a wave 3 there, but I'm a bit dubious about that as well, because the wave 1 here and wave 2 was quite simple to understand, and the idea was to go long, well, this was a 61.8 retracement level we were looking for, and the idea was to go long above the 43.72 there, and looking to add on the 44 and target with the 45 up here. But when I'm counting this third wave up here, it counts better with, in the third wave, as actually 1, 2, and then the third wave up would be the 1, the 2, the 3, the 4, and the 5. So it may just be the third wave and the fourth wave and the fifth wave coming up here. So this third wave may end up going up the top here, further up here. So just be mindful of that. Just take that with a pinch of salt at this stage. But what we do have is this as a corrective pattern here. So this is a corrective pattern here. Eventually new highs would be made. Will it go up for 1 and back for 2 and up for 3 there? Possibly, but the other scenario would be an A, B, C here, then a B wave, and then a C wave, and then to the upside. So this is where the levels come in important here. So if we drill down in here a little bit, we could count this as up for 1, back for 2, up for 3, back for 4, and up for 5 here, and looking for some type of A, B, C correction back here, or an A and a B and a C back through here. So what I normally do is that it's good if this price can pierce through the 72 here, and then if it does that, then find support on it, then you go long from that point. If it doesn't do that, or just comes back down to here again and then finds support on the 80, well, then you trade long from that point, and keeping the stop under the 72, always at odd numbers like 63, under group 2 here, 63, or 67 here as well. So just allow that reset to come into play and so forth. Alrighty, let's have a look at the commodity markets, as they were a bit stable, and they would also be finishing their corrections if the indices are finishing their corrections as well, because the US dollar would be doing the opposite. Okay, the base metals, copper here. As you know, we've been looking at a wave 4 falling into play here, and it may be completed now as well, because we've got the A wave, the B wave, and the C wave down through to here, and it makes the C wave is always in 5 waves, and we can see that we've got the third wave, which is the strongest wave, in the middle here, and then we'd have wave 1 down here and wave 2 here, and wave 3 and wave 4 and wave 5. So this moving up through here really helps, set that 5-wave structure in play there, and also being back above the 72 is helpful as well. So as in the stocks, this is an 8-hour chart here, so on a small scale there would be some sort of positive wave structure within here, and this would be retesting. It's always a game of supply and demand, support and resistance, and of course money management. So this pushed up here, met the supply over here, this block, so that would force it back down to meet this block here, and that's how it works. But if this is correct, if this A, B and C is correct here, then we'll be making a new high here. This wasn't on the equinox, about the 19th, I think. Yeah, so, it's got the same sort of pattern in there, so we'd be looking higher up through here, so we'd be looking for a move up through here. And of course, that's going to take, if that is the case, that's going to take our material sector higher, which could move reasonably quickly because it's been lagging from the banks, And another little point here too that I like to make too is the Chinese market. This is actually a monthly chart here, and this is a correction that's been going for quite some time in terms of, well, we can see that it's corrective because we've got this 3-wave structure here, so that's corrective. So we'd have to count that as an A and a B and a C wave, for an A wave, up for a B wave in 3 waves here, and then we'd be looking at this as a C wave to the downside, and a C wave's always got 5 waves in it, the 1, the 2, the 3, the 4 and the 5. So essentially we've got basically an ABC correction, and then we've got 5 waves in this structure through here. So, I'm actually thinking that this bar here, this monthly bar here, it's closer, it's got that sort of bullish engulfing pattern, I suppose. But look, there is stronger volume on this bar here. We just need to see some follow through with it. So this could be the low of a large correction through here. So this could also fuel the Australian market as well. So I think that's like worth noting and keeping a bit of an eye on. So I know that most people don't look at the Shanghai or the Shenzhen much, but it's just at an interesting junction that could prove a real sort of underlying driving point, for the markets. I know that, the media are saying, China's slowing down and yada yada yada, but that's when markets turn. When everybody thinks it's bearish, that's when the market turns. And when everybody's talking about this a bull run that will go on forever and ever, and you got to get in and so forth. When that's very strong in the media, that means that everybody's actually in the market, so who else is going to get in to drive it at that point? So that's normally the turning point at that point as well. So, so just sort of bear that in mind, not get lost in the media and stay with what you see. So this is what we're seeing, and let's just see how it develops, how much steam this bounce on the trading level 2 here, the major level, has actually got in it. Okay, so that's base metals. So gold wouldn't be, base metals and gold, both metals have got same sort of characteristics to some point. We were expecting this market to pull down here for its wave 4 down here, but it's reluctantly doing it. But I've just left this in here because until that 772 there becomes the support, then it's at risk. So you wouldn't go long unless that was a tested support, okay? And that would be the setup to go long at that stage. For the traders that know 18 here, then you know that this would be the arrival, the reaction through here for this, and then we'd be looking for the first high above the level, and then a larger correction from that point. So just the classic trading levels pattern that would unfold across here. How far that would go up, I would need to have a bit of a look at that stage, but there'll be some sort of move to the upside and then a correction back down, testing. But this block here, as I mentioned before, here will be the support. After we reach, the first high above the level and comes back down, then we can look at these numbers here as support. So, but we should see a nice run up through there. The oil market as well. So we would, kind of considering before that a little bit short, but, we're sort of staying with the A, the B and the C here, and it moving up through here. This also counts as a little A, B and C up to here as well for oil, and in the C wave we've got the 1, the 2, the 3, the 4 and the 5 here. But, this can be up for 1, back for 2, and then up for a smaller one and back for 2 and so forth, or it can be the A, the B and the C here. We're not really quite sure just yet. So, but a new high above here would help that. And as we always know, with using the levels, Elliott wave gives us direction, but the price here, or using the trading levels as support or resistance, gives us a basis and a setup to work from. So we know that if 93 becomes the tested support, and that would mean a first high above the level, and then coming back and checking and then getting back up there and sitting on there, then we would have something at that point there. So just consider that. So just looking at the intraday thing here, I'm just looking at this little bit here because I know I had that sharp sell-off there. So we've got this 1, 2, 3, 4, 5. I'm just wondering if this was the A, the B and the C wave to here as such. Checking back into the 90 and then moving back up through there. Just checking here for a second. I haven't actually looked at that little structure there just yet. It looks a little bit positive, and this here too, coming down in 3 waves here, is a corrective wave here. So as long as it stays above the 92 there, then would be on the positive side of the market there, but this does look impulsive here, and that means that, you know, it came down quickly here and it's struggling to go back up through here. So yeah, just give this a bit more time at the 92 here. If it does hold as really good support and then finds a 92.50 as support, or the 92.30, because that would be subgroup 1 in here, then you can work from that point there. Alrighty, let's have a look at currencies. Okay, the US dollar, we're still toying with the wave 4 here, and it could be complete now as well. So we could have that wave 4 sitting on top there, and as you can see, the markets moved down through here somewhat. But I'm not convinced, and in fact, I'm a little bit lost on it. And we'll have a little look at this structure to see what's what here. You know, as always, is that you know, this market is retesting the 80, and whatever happens, if this market finds the 80 as support, then that's going to put this in a positive mode, and the rest of the market's in a negative mode. So that's one thing to consider. The other side, of course, is that, you know, if it develops as resistance, then and continues to move down, well, then all the other markets are going to be stronger. That's the bottom line. And what we've been trying to do is work out, you know, what the correction is through here. And as you know, we're looking at it as an ABC for an A wave to here, a B wave to here, and then 5 waves for the C wave to finish here for wave 4 here. However, this little move up through here hasn't really quite developed in the 5 waves. It could do if we included this one here, but it hasn't really it just hasn't really confirmed it enough for me. So it's just a little bit annoying, but because we're looking for 5 waves up for the C wave, so we're looking for a 1 and a 2, and then we were looking for the 3rd wave, which had 5 waves in it, and then we were looking for the 4th wave, and then we were looking for the 5th wave. Now that could be fine, that could be the 5th wave there, okay? So, but it just seems a little bit small, but yeah, I can sort of run with that in a way, and the reason that I would run with that in a wave 4 is because it's a little bit, markets have, they have a little fingerprint, and you've got to sort of find it. And when we look at this structure here in this 3rd wave here, we see that we've got a long wave 1 here, and then the wave 2, then the wave 3 here, the wave 4, and the wave 4 could even be into here as well, then the wave 5 here. So whichever way we take that here, the wave 5 has been very short here. So this would make this one quite short here as well through here. So yeah, so anyway, I can't really give you a clear answer on that, because see, the flip side of this too is that this move down through here can be counted in 5 waves. So we could have an A and a B and a C wave developing here, and the C wave would have 5 waves in it too, the 1, the 2, the 3, the 4 and the 5 here. So after this wave 5 comes in through here, 5 waves down for this move here, that could complete an A and a B and a C wave here, and then we could be pushing back up from that point. So I just don't know. It's going to take about 2 sessions to figure out here, because first of all, it's got to complete the 5 waves down here, and either way, once it's completed, either way, it'll either have an A, B, C back up and then fail from that point and move down, or have an impulse wave to the upside. So I don't know. The bias by looking at the European stock markets and the US markets is that this will continue to the downside and find the 80 as the resistance. So, but just letting you know my sort of just my confusion on this one here, and it's just going to take a little bit to sort out from that point there. But we do know that you know, this move here is a corrective move, because this move up here is a corrective pattern. It's just that wave 4s deliver the most complex patterns of all, and they're normally time consuming and so forth. So it's just how long we're going to be here for. That's the question, you know. So we are looking for that drop down through to here. As I mentioned with the ABC corrections for the other markets, the copper market, and the S&P 500 and the DAX and so forth. They've completed their wave fours on the European markets, but may not have completed them on the US market. So that's why it's also showing up here. It's not so sure as well. But once that is complete, we'll see that down, and that will help drive those other markets up. So of course the euro is doing the mirror opposite as well. So this is just the 15-minute chart here. I suppose we could just stay with that for a moment, or should we look up through here? This is just, I'll just go back to the bigger picture here just so we understand. So once again, the wave 4 here as well, the same as the S&P 500 and the Dow. We've had that nice push up through there, so it really helps make that wave C go over here and that wave 4 be completed there. So an A and a B and a C wave could be completed to here. So in looking and drilling down into that, and also remember that the 130 here needs to become, for any serious sort of longer term trades to the upside, would need that as support there. But even once we've got wave 4 completed here, we'd be looking for wave 5 to come up through here, just making a high above here, and then coming back down again for another corrective pattern before we see further upside there again. So because we've got the extension in wave 3 here, the wave 5 here will be somewhere in the vicinity of this length here for wave 1 here. So we still don't have a huge setup coming just yet, and that will come much later when we're looking at this, say, this weekly chart here. Would be looking for, this is the 3rd, the 4th, we're looking for the 5th wave to move up through here, and then we'll be looking at a move coming back down through here, but in an A and a B and a C wave, and once that's completed, then we should have that nice run to the upside. Okay, so it's still got a bit more time to work through, and we really want the 130 here, which is the top of minor group 1, as support through there. So just with that in mind and drilling into here somewhat, what we've been doing over the last few days, we've been looking for the A, the B and the C up to here, which we got, and then we were looking for 5 waves down, which we've got the 1, the 2, the 3 with 5 little waves in it, the 4 yesterday, and the 5 is coming to play now. And then we're looking for this move up here. And this move up here is looking quite attractive as an impulse wave, because we can see the strong 3rd wave in the middle here. So if we just drill down into that area there, we can see that that's playing out through here. So what we've got here so far is we've got, on the 15-minute chart, we've got 5 little waves up for wave 1, back for wave 2. We've got wave 3 up here, wave 4's unfolding here. Because wave 2 was simple, wave 4 is going to be more sideways and complex. So but anyway, once that's finished, then we'll see a further push to the upside through here. Don't hold this, against me here, but I move higher than this top of this 3rd wave here, because the extension's in wave 3 here. It should be roughly the same size as wave 1 here. So depending on how far that comes back, this will come back 38.2% of the length of the 3rd wave here, or to the 4th wave of 1 lesser degree, so somewhere in amongst here. And you can use subgroup 1 here as your sounding board to trade to the upside here. But the real trade, I think, will come from when wave 2 is completed here. So we'll get wave 1 at 5 of 1, and then an A and a B and a C through here. Then up from this way, and this will be wave 3 going to the upside. So that should move up quite strongly. So that's the wave that you want to. If that's wave 1 to here, then wave 3 is going to be longer than wave 1 here. Okay, so we'll also have 5 waves in it. So quite attractive to the upside. The Australian market I find very interesting, and I think that that there could be an alternative wave structure in here as well. So what I mean by that is that this pattern that we've been following through here as an A wave, and then a little ABC for the little A wave here, a B wave down here, and a C wave up here for the B wave, is a real possibility. And then we've got this 5 wave structure down here, which would be the C wave. Okay, now I've got it labelled just as the A wave here, but also this could also be labeled as the end of the triangle as well as wave E here. Okay, it's just a thought, and we'll just keep an eye. And the reason for that is because if the S&P 500 and so forth have finished their moves, and we've got the low on the Shanghai market as well, then we could see a push up from here based off that. So we do have that sort of fundamental story that weaves quite sort of well, and in terms of the other technical charts, I guess, but this also as an A and a B and a C wave down to here. Now that would mean that we would need to see an impulse wave move up through here. So how we've been counting it so far, and yesterday and the day before and so forth, as an A and a B and a C wave up through to here. Okay, that would be finishing in this area through here. However, this can also be counted as an A wave up here. It can be counted as wave 1 and then wave 2 here, and then we've got wave 1 of the next degree smaller here as wave 1, and then pulling back in for wave 2 here, and then wave 3 up through here. So I guess that if we can find support on the 102.72 and then further development and support on the 103 here, then I think that we should take quite seriously, and with a stronger move to the upside. So this would actually be a good setup and a trade to the long side. You don't have to risk too much. We can just, depending on how many contracts you trade and so forth, but basically building in a trade all the way up through here. But of course, the US dollar index has got to stay below its 80 as well. So I'm just putting this on the table there as a possibility. So, yeah, support on top of 102.72 would be the first contract, then another one on the 102.80, and then look to build the trade on 103 here, and then also to build the trade through subgroup 1 on 10.20, and if support is found on 30, then you've got it from there, and would also want to be building in this area here if that was the case as well. Otherwise, if the 102 fails and holds the market as resistance, then we'll see further downside, and that would be it from here as well. So this particular move down through here so far looks quite corrective in nature as well. It's got overlapping wave structures. It can come further, of course, down here, but if it comes down through here and then finds support back up here, then that creates the long trade and go from that point. If the market moves down through here and comes down into this area through here, because we'd be seeing a 61.8 retracement level from this one here, if that was actually a wave 1 coming up through there. So it can pull back down to the 104 here, so that would be interesting at that point. If it pulls down here below the midpoint here and then finds support back up on the midpoint here, then you could go along from that point with the view of adding back up here if that was the case as well. But the 102.72 is the stronger number through here, and that's the one that you really need to use from there. But I think that's a really exciting opportunity that could unfold in that way. So yeah, just keep an eye on that, and we'll do some more work on that particular structure as well. So all good. Okay, so also just in finishing, if the US markets have got their low into place and the dollar does stay below the 80, then that would really suit in with the bullish weekly cycle for next week. And what we'd be looking for there is that yesterday was the bear day, but on lower volume, so that was good. Today, if we see a stronger upside today with stronger volume, then that would be a nice setting, and hopefully seeing the follow through on the Monday as well, with the profit taking on Tuesday and a higher close on Tuesday afternoon, the same sort of V-shaped day for the Wednesday and so forth. If that's going to be the case, it may not be the case, but I always find it handy just to be mindful of it and aware of it. And because if it starts playing out that way, you can really start sort of using it as a tool, with the levels and the wave count and so forth. It just adds a little bit of timing to the situation. Yeah, so alrighty, well, that's it. I just also want to mention too that there have been some problems with the Profit Keeper in terms of downloading the GFT data. The programmers are on the case. They're going to be fixing that now, and we'll also update that product list and also the product list for IG markets and Halifax as well within that. And it looks like we'll also be going to South Australia to have a bit of a yak at the ATAA meeting at the end of this month. So it'd be nice to see any friends down that side of town. Alrighty, well, good morning and good luck.